There's something called the RV strategy where you utilize Section 179, assuming that the RV is over 14,000 pounds. You're able to, and it's 100% utilized for business. You can fully write off the vehicle in that year by having it as a vehicle itself, because it qualifies as personal property. The moment that you hook up utility lines to it and you put it on the ground, then unfortunately it's going to be either qualified as a transient unit if it's being short-term rented, or it's a dwelling unit as a long-term rental. So obviously if you're going to put RVs on land for a glamping business or something like that, you're going to want to utilize it as a straight up RV rental first. Get it rented out a couple times, and then 100% for business. And then once the depreciation is taken, you're still utilizing it for business, but just in a different capacity. So we're transitioning it over to a short-term rental or long-term rental, kind of however you want to see fit. And that is the best way to kind of get the most tax deductions that are actually state tax deductible, because a lot of people don't talk about this, but bonus depreciation does not really help with state income taxes.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is a Frederick, Maryland-based enrolled agent who works with investors across a wide range of verticals. Please welcome Bobby Mucka. Bobby, welcome to the show.
Oh, thanks for having me, Dylan.
I always like to start off at the top, Bobby, by asking folks how they got involved working with real estate investors.
Okay. Well, we kind of had a very humble beginning. I started this company, just as a bookkeeping firm. It was just to make a couple $100 extra at the end of each month. And we actually didn't start out in real estate. We started in the nonprofit space. So that was my first client, who I still have on my actual client list today. We just don't charge them as much. But for that, eventually I branched out. I started getting into tax. It was a big jump from there because I had to learn a whole bunch of different tax law and everything about, all this interesting stuff on real estate, because there's just so many different, areas that you can work in. You can go into, real estate lawyers. You can talk to other accountants. You can talk to realtors, short-term rental, long-term rental, construction. The possibilities are nearly endless. Wholesaling, even.
Yeah, I mean the real estate avatar for an investor is not one specific thing. Whenever I have guests on here, who are in one super niche area, like for instance distressed real estate wholesaling, I kind of say, well, this is awesome that you're doing what you're doing, and I have personal experience and I can say this: people have to pivot seemingly every 5 years, and even in your business you talk about pivoting. And so I want to ask you about that. A lot of investors, I would say, may have a strategy that might work now, but it didn't work 5 years ago, or vice versa. Mm-hmm. I know a lot of fix and flippers out here in DFW who may be seeing the margins are slimmer and slimmer, or they may be moving more towards ground up construction, new builds. In your business, How much of it is kind of an analysis and an advisory versus a strategic, hey, let's mitigate taxes?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So it is I would say it's about 40-60. When we're talking about consulting area, which includes the strategy and consulting in like one umbrella, yeah, I would say 60% is people just asking questions, and then 40% is going to be, and the next 60% includes financial analysis, making sure that these properties will indeed actually potentially make money,
Yeah.
unless something goes completely awry. And then 40% would be that tax mitigation, which I'm proud to say that last year we saved our 20 of our top advisory clients in aggregate about $600,000 at
Yeah,
this point.
unbelievable.
Yeah.
Congratulations. Yeah. One of the things that I think about is, and we talked about this before the show, Bobby, is sometimes people think, well, who do I go to for tax strategy? Because there's so many different options: tax attorney, enrolled agent, CPA, unlicensed people, right? And it's kind of analysis paralysis, especially as someone myself who's been in the business for 2 years, but before getting into the business, I didn't really know anything about tax strategy. It was very overwhelming. So how do folks really find their right people to align with in the tax strategy space?
Gotcha. So, first thing, don't go unlicensed ever. It's just not the wise choice to make. Now, honestly, not all tax lawyers are tax strategists. I have a couple of lawyers in my client list. Generally, CPA or EA, we're going to be more aligned with strategy, but it depends. So it's not so much on the credential, it's more of who you actually get with. So, for example, I specialize with tax strategy, and then I also offer tax preparation, but there are CPAs and other EAs out there that just do the tax work. They just do specifically preparation. That's it. Or they'll do accounting, auditing. Because CPAs, they're more generalized, necessarily have to focus tax. Some of them, I have CPA clients that I file their tax returns because they don't really do that. And they're working in Big Four. And then I've got friends that are CPAs that focus solely on tax, and they do amazing work.
Do you find that a lot of people who are getting tax advice and tax strategy are oftentimes being pulled in a couple different directions and then kind of end up deciding on their own? Because I see a lot of this at the level that I'm at, which I would say is, I haven't done, 100 deals, but I've done 20 plus. And so I'm kind of seeing behind the curtain. And one of the things that I've noticed is I'll go to someone who seems to be saving a lot in taxes, but I'm realizing, well, that's not exactly 100% by the book. And then I'll go to someone else who's really overpaying in taxes as far as I can tell. And I'm saying, well, they would be saving, tens of thousands of dollars if they went a different direction. So what's kind of the line that people should toe in your mind when it comes to, what they claim as deductions?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Gotcha. So you want to focus on people that are aggressive in their tax strategy, but within the confines of the law. So the goal for most of that stuff is to have the appropriate documentation to make sure that you're not lying and, fibbing about I drove, X miles when it's actually Y, and it might be a little bit lower. You also want to make sure that everything that you do is recordable and you actually document it. If you're not documenting things, then I can't really help you very much. Like I can put stuff that you like if you give me like, oh, I have 50,000 miles or never put exact zeros, anything ends with zeros on the tax return. Tip number one of like audit red flags. But because nobody drives exactly 10,000 miles, it's very rare. 10,001 is less suspicion than exactly 10,000. But I've had people do that to me, and I'm like, okay, what did you actually drive? And it's like, oh, I don't have records. I was like,
Yeah.
okay, well, I don't know
Okay.
what you really want me to do here because I'm supposed to put what you actually drove. If you can backtrack and figure that out, that'd be great. And ideally, stuff like that for like a logbook, you'll want to make sure what I tell all my clients is January 1st, at the start of the year, you're going to write down what's on the odometer for your business vehicle. And then you're going to document every time you use it for business. Now, that's going to be date, where you're going, who you're meeting, kind of like why you're going there, and then the mileage. If you can do that, great. And then last year, in the last day of the year, December 31st, you're going to go ahead and write down the odometer again. That's going to give you your total miles driven, so beginning and ending of the odometer reading, and then all your business, so then you have your personal miles too. So then we can come up with the ratio of business to personal use.
What do you think about Mile IQ?
It's helpful.
It's a good one, right?
Yeah.
I've spread their kind of gospel. I think it's helpful to have. It's like $90 a year. I say, well, if you can save thousands of dollars doing this, it's helpful to have it. It runs in the background. I want to pivot a little bit here, Bobby, and ask you about when folks are scaling a business, should they reach out to a tax strategist? I mean, I think a lot of people kind of kick the can down the curb until they're thinking, well, when I'm making X amount of dollars, this is when I should do it. Or when I've closed this amount of deals, or, at this point in the year. If someone is a newer entrepreneur, when should they start thinking about tax strategy?
I would say when you start a business, you should consult with one at least for like an hour just to kind of get your bearings. If you've never done a business before, it can be a big shock that you have to keep track of all these things because you actually have to do additional work. I mean, there's a reason that you're your own boss. So just to get what incomes are, deductions are, the basics. You could meet with me for an hour. My initial consults are only like $200 for the first time you meet with me. Then it bumps up to $300 an hour. Once we get that baseline down and you kind of have an understanding, great. Like you're off to the races. You probably only need to see me once a year at that point, unless you're making over $50,000 a year in net profit. Once you hit that point, then there's additional tax planning that we can start talking about, as in getting an S corporation and then looking into other deductions as well once we get that. But then after that, you're going to want to be in probably the $150,000 to $200,000 profit area, or at least total income area, before you really want to have regular meetings with a tax strategist such as myself. And that's because we need capital and we need time to invest, and you got to pick one or the other, or a mix of both, because obviously if your goal is to become a real estate professional, you need to put a lot of hours into that, at least 750.
Oh.
Meanwhile, if you want to do short-term rental, the requirements are a lot less. It's 650 hours less, or maybe a little bit less more than that. And then if you wanted to do like totally passive, whatever, like there's really you just need more capital for that. So the capital and time, the more capital you put in, the less time you have to put in usually, and vice versa.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And we were talking about this before hopping on the podcast. There is a benefit to in many cases actually, showing a larger income, even if you pay a little bit more in taxes, because you can qualify for other types of loans. And so I've encountered this quite often on this show because I've spoken with people who've, written off everything and now they can't go the traditional route. So they have to do DSCR loans and creative finance and so on and so forth. And so it is a little bit of a double-edged sword, because if you show that you didn't make a whole lot of money, then what are they going to base the loans off of, right? And they're going to have less confidence there. I'm curious to get your perspective on a couple different real estate investments. And of course, no one has a crystal ball and no one is a one-size-fits-all strategy. But a couple things that have really piqued my interest and a lot of the listeners' interest on this podcast lately has been like land deals. And I'm out in Texas, right? So we've got tons of land, but in other areas as well. And there's even some plays like storage facilities where people can get SBA loans because it's considered an active business versus like a long-term rental property. So I'm curious to get your perspective. Maybe don't give away all the gold, but maybe give us away a nugget. What are some strategies which may be better from a tax-saving perspective than others?
Gotcha. So when it comes to land, obviously we can't depreciate land. So that's kind of a wash right there. It doesn't really help when it comes to taxes. But generally, if you're, specifically you're buying like kind of vacant land, on raw land, stuff like that, you can rent it out as hunting land. You can do glamping, camping. You can park RVs on it, and the RVs themselves, this is like one of my favorite tax deductions, but there's something called the RV strategy where you utilize Section 179, assuming that the RV is over 14,000 pounds, you're able to, and it's 100% utilized for business, you can fully write off the vehicle in that year by having it as a vehicle itself, because it qualifies as personal property. The moment that you hook up utility lines to it and you put it on the ground, then unfortunately it's going to be either qualified as a transient unit if it's being short-term rented, or it's a dwelling unit as a long-term rental. So obviously if you're going to put RVs on land for a glamping business or something like that, you're going to want to utilize it as a straight up RV rental first, get it rented out a couple times, and then 100% for business. And then once the depreciation is taken, you're still utilizing it for business, but just in a different capacity. So we're transitioning it over to a short-term rental or long-term rental, kind of however you want to see fit. And that is the best way to kind of get the most tax deductions that are actually state tax deductible. Because a lot of people don't talk about this, but bonus depreciation does not really help with state income taxes. Now, in Texas and Florida, and where there's no state income tax, sure, like that, there's no issue there. But in states like Maryland, where I live, we don't, and I get taxed like an effective 9%, and it's very high. Also, high cost of living. So we're actually looking at moving to Tennessee or maybe Texas. We'll see. Yeah, there's a lot that you can do with Section 179 because basically every state in the union adheres to it. It just depends. But almost zero states adhere to bonus depreciation.
I think a lot of RV owners will be happy to hear about that strategy. Just that don't hook it up, right? You can't hook it up. But if you don't, you can take advantage of some strategy there. Bobby, we are coming up on time here. Where can folks go if maybe they're in the Maryland area, the DMV area, or they're anywhere in the country and maybe are looking at some tax strategy or would like to reach out to you and get your feedback?
Yeah, of course. Anybody's well within the rights to reach out to me on my Instagram at Bobby Mucka. You can also go to my website, www.thefinancialstrategists with an S at the end.com. And then, of course, I'm also all over Facebook as well. Same name, and you can book me on my Calendly. I think I have it on all of my my website and my social media.
Bobby, thank you so much for coming on the show here today.
All right, well, anytime, Dylan. Appreciate it.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.